Welcome to our poll for last week, which was property, stocks, or crypto, or stocks, crypto, property, whatever you want, whatever order you want to put it in. And I want to do a video about this now, but I want to as well put a little disclaimer or a big disclaimer because this is not financial advice. I'm not licensed practitioner or advisor when it comes to stocks or crypto. So I cannot give advice on these assets. Today is just a general opinion, my own opinion, and I'm just going to weigh out some of the pros and cons of these assets. I'm a licensed property buyer's agent that can give advice on property, but not these other assets. So today is just my, own knowledge that I know about these assets here. I do drink my own Kool-Aid. I own all these three assets here, so I know a bit about them than the average Joe. But today is just, I guess, a basic level of understanding, I guess, the pros and cons and the disadvantages and the benefits of these assets. Now, if you're wanting to, get into the stock market or you get into the crypto market, I highly recommend you speak to a licensed professional, someone that is someone that's trusted as well in these spaces, especially when it comes to crypto, because very it's renowned for scams and all, etc. But making sure you get the right information from the right people. If you're looking for property advice, you know where we are at Fresh Start Advisory, where we can help you and actually put you on the right track tailored to your personal situation. But that's enough. Let's get into it. So, like I said, I've got three of these. I own three of these different asset classes, and I'm going to discuss the pros and cons. So let's start off with ASX 200, which is the Australian Stock Exchange, top 200 companies. Okay, so you can put your money and put $10,000 in the ASX 200, and you get in, say at the price it's at now 7,300, and you know that you want it to go up. So you're just buying and holding, and leave it in there for a year. In that year, you're going to create dividends and etc. But let's have a look in the last year what this stock exchange has done. So this is the top 200 companies in Australia. It's a safe haven, they say, hypothetically. Over 9% it's made this year. If we look here, over 9% it's made, a return on investment, which is, it's pretty good. If you look at, term deposit, you keep your money in a term deposit, you'll be lucky to make even 1%. So something like this can be a great reward, a great investment for some individuals, where you can make a nice steady return in a certain year, and 9% is a really, really good outcome. Maybe it's depending on your opinion, but I'm not going to talk about different trading types of stocks, because there's other things like option trading and other things like that. So I'm just keeping it basic here today, so I don't want to blow people's minds too much. Now let's talk about the pros and cons. So cons, I guess, you don't have control of the company, so you don't know if the company is doing well or not. It's not, it's just something that you're putting your faith into a company, and a lot of people don't do research. They just go out there and buy the company, making sure, the company's doing well and it's performing year on year out. So, it's making, its revenues going up and up. And of course, their expenses are staying, in relatively the same, if not going up a little bit with their revenue, but their revenue and their income or their cash flow is increasing as well. So they're making a profit. That's something to keep into consideration. But even if it is, the company is doing well, which is my second one, I guess it's the economy drives the stock exchange, not really the company. And what I mean by this is because if you look at things like COVID, some of these companies were performing quite well, and something happened, bang, everything crashed. Then, of course, you've seen the companies that did shine after that, your Amazons, and I'm talking now American stocks, Amazons, and your Teslas, etc. If you look at Australia, iron ore companies were performing quite well. Now, there was a down moment for quite some time. It was like a month or so, and then of course things started to pick up, and you've seen the industries that performed quite well and some didn't. So the economy has a massive effect on this. Okay, so when it comes to the stock exchange, like most assets as well, but I'll touch on with other assets and I'll give you my opinion. Now, getting access to credit. Now, if you're someone that owns stocks, now if you wanted to, depending on what stocks and what exchange, etc., and how you're doing it, you can't go to the bank and say, listen, I've got 20, 30 grand, 40 grand in stocks. Will that help me get more, more my borrowing capacity, or will help me get a loan so I can use that loan for whatever reasons? Very unlikely, unless you're someone that's quite significant, that's got large capital, quite sophisticated investor, and I guess you're not the average Joe. So this is tailored to, I guess, people like myself, and I guess the majority of people watching this video. So that's the downfall, when it comes to accessing credit. Now, if we look at volatility, if you look at the stock exchange when COVID dropped, COVID came in, I should say, in Melbourne or Australia in March, the stock exchange dropped billions and billions and billions of dollars. Now, if I can't remember, I think it was something like 50 billion or something like that. It dropped overnight, bang, click of a finger, everything dropped. That is crazy. It's ludicrous. A lot of people lost money. And things like, superannuation, a lot of the superannuation where your money is getting invested, it's all in stocks, majority of it, stocks and all different types of other assets. Now, when things like that happen, people lose their retirement. So things like this, it's very volatile. Now, next thing is paper asset. This can be a pro as well, but I'll put it kind of as a con. So you can keep it as a pro, and I'll touch on that as well. But a con, why? Because this is a paper contract, really. You're just buying something that's a paper contract, just taking faith into a company, which of course is all good if you your values stand with what the company is doing and the company is doing well, of course. But I guess it's a paper contract. Okay, so you don't really own the company. You own a certain portion, if depending on how many stocks you own, but it's a paper contract. And I guess we're keeping this simple. Now, you cannot leverage or swing trade on buying stocks. Now, we're not going to talk about puts and calls and option trading and all sorts of things like that. We're just keeping this basic. So you're buying and holding here. You'll get a dividend, but you can't, I guess, leverage or swing trade, which you can do with other things like cryptocurrency. So I'm just keeping this very basic. Okay, so this is something just to give you an understanding. Now, next thing, there's no tax benefits. Okay, you make your profit. If you make $100,000 in stocks, and let's say you own it for a year, you're going to pay your CGD, your capital gains tax. Now, you got tax breaks. There's no depreciation. You can't claim for all the expenses and all the other outgoings, of course. Now, so that means you're going to have to pay your tax. Whatever your profits you've made, you're going to have to pay tax on that. Okay, so let's move on to pros. Now, I'll touch on with, I guess, a paper asset. It's flexible. You can get in and out. So it's easy to buy and easy to sell. Low fees involved. There's nothing like I guess property. You don't have all solicitor fees, pest and building, and all the other fees that involve, when it comes to property. So there's something like this, you can get in and out, and the fees are very, very minute. Sometimes it can be $20 depending on the exchange. So, or $20 or $30 or $40 a trade. So you're in and out very quick. Time is very valuable here. You don't have to wait and you don't have to go through a whole process and try and sell the property where it takes a long time to sell. For say, maybe it might take 30 days, 40 days, 60 days, whatever it may be. High returns. So you can make massive returns in the stock exchange as well. Doing the right due diligence, you can make great returns, which is in a short period of time as well. So stocks, they can be classified as short gain. High return in a short period of time compared to your property. Staying ahead of inflation as well. So, this track record doesn't really lie. When it comes to stocks there in the last, say, 10 years in Australia, they've been staying ahead of inflation. So it's been a kind of a safe haven as well. And I guess, like I said, you're in and out of minutes. So you're not there waiting to sell this stock. You're in and out in minutes. So this is just for stocks in Australia, ASX 200, my pros and cons, my own opinion. Take it as you wish. Do your own research, like I said. Make sure you understand about these assets. Don't go investing in these assets without any experience, knowledge, or not even doing your homework, because you will get burnt like any other asset. Let's touch on the next thing, crypto, Bitcoin. So Bitcoin, as we can see here, in the last year, it's grown 194%. You look at it and go, geez, 194% in 1 year. Yes, that's amazing. Property's never done that in 1 year, not to my knowledge anyway. Some stocks, I don't think so. They've done something like this at all, not to my knowledge anyway. So you look at that and you go, Jesus Christ, it's some big money to make. But just have a look at this chart and you have a think and just have a look at it. And I think it's quite volatile, but we'll talk about this. So cons, volatility, very high risk, as you know, up and down. Sometimes it can move, a large number of percent, a double-digit percent in a day, 20, 30% in a day, sometimes maybe even more. Okay, and so if you've got your money in there, it's a very emotional roller coaster. Seeing that this Bitcoin or these other coins going up and down in seconds, and you're looking at it and you're, oh, Jesus Christ, what's going on? Is it going to crash or what? And all of a sudden it just skyrockets. So it's very volatile. I guess there's limited use for these coins as well. So most of these coins do serve a purpose. Some don't, of course, each to their own. Getting access to credit. So if you've got Bitcoin, a certain amount of Bitcoin, now things are changing. I'm not sure if you can go to the bank and maybe down the future you might be able to, if you've got a certain amount of Bitcoin. Hey, I've got this Bitcoin. To your local bank manager or your broker, you might be able to get access to credit. But at the moment, the banks don't value it. So it's not going to help you get more access to credit if you want to use that credit like a loan to do something with it, if it's buy property or even just to get a personal loan so you can buy a car or buy some goods, etc. I guess it's influenced by other people, I should not say there. So people like, your Elon Musks and all the rest of them, they come out on Twitter, they say something, all of a sudden this thing goes up through the roof, or it's going to drop. Okay, something happens in a newspaper article, all of a sudden this thing's going to go up or down one way or the other. Okay, so you don't. It's just very influenced, and there's a lot of things where people have a say when really they're not. Some of these people might not even be trading this currency, and they're making it volatile as well. Scams. So there's a lot of scams when it comes to cryptocurrency, as you know. I know friends that have lost a lot of money. They've left their cryptocurrency on a stock exchange. All of a sudden they log back in, it's all gone. So there's a lot of scams, a lot of dodgy people out there. And so this is something to be aware of. And again, last thing, no tax benefits at all. So at one point people weren't getting taxed for their profits, but as the government do now, they come in and they want your profits. So unfortunately, times have changed. Pros. People can say this is not a pro, but I say it is. It's not government. It's not government regulated at the moment, which is a beautiful thing. So it's the people's money, I call this. They control this. Of course, it's controlled by multiple other factors as well, but it's not regulated at this point. And it's they're trying to get their finger on the pulse of Bitcoin, but this is something that it's a good thing for the people, I guess. And it's not like it's not getting taken advantage by, I guess, other industries like banks and stuff like that, like other assets that they've been artificially pumping in money, like the stock exchange, which I don't want to touch on too much, but when they printed all this money, they pumped it into the stock exchange, which the government's done to keep that stock exchange up. Okay, so they can keep the prop, so all those companies didn't lose money. Okay, so that's something to talk about for another day. But limited supply, so scarcity. So Bitcoin, I think it's 21 million coins only, available in the world. So a lot of those coins, some have gone missing, so there's less coins now. So scarcity, it's like property. Scarcity, you buy a block of land or buy a house in the inner city, or say of a capital city, or in the regional town that's in a really good area. You can't just go knock down a farm now and build more land. Same goes with Bitcoin. They can't just go creating more coins. So there's scarcity involved. High returns, as you can see, but very volatile, but very high returns. You can make thousands and thousands of dollars in a day, which is, amazing. If there's a lot of people I know at the moment, making big money in a short period of time. So I guess it's fast transacting. So like I said, it's like stocks. You can get in and out very quick. It's very flexible, which is a bonus. Leverage and swing trading. So stuff like this, you can leverage and swing trade your cryptocurrency, where you're leveraging other people's money and putting a certain portion of your money and then getting money from the exchange, and you're using that to swing trade. So or leveraging, I should say. This is something that take into consideration. Do your own research about this. Of course, very dangerous, but as well. So I should put that as a risk as well, because a lot of people can lose money by this. But you can make a lot of money if you know how to use the fundamentals or the strategy correctly. I guess, like I said, in and out of trades within minutes, which is amazing. And I guess staking, so accumulating interest. This is something that myself, you can keep your cryptocurrency in a staking platform. Places like Nexo and a few others. I think Crypto.com do it as well. And let's say you just got one Bitcoin, for example, and you put it in this staking thing, in this staking platform, and you're accumulating, say, 8% of interest. So that Bitcoin there, you accumulate 8%. interest for the year, which is amazing. So you're accumulating that interest year on year out. Some of these staking platforms can offer up to 12% or even if not more. So you're really, really doing quite well, and it's probably outperforming, which it is outperforming this, the ASX 200. So this is the benefit. So last but not least, my favorite, which it comes to property. Now this is very hard to do because properties, it's suburbs and suburbs, it's markets in markets. So I'm just going off here, and I've got, the last index results from 2021, end of November, and we can see how much it's grown. Property market, 28% in Sydney, 19%. If you look 28, this is overall in Sydney as well. So it's a median price, so it's a middle price of Sydney. Of course, depending on the suburbs you go, some suburbs are worth over 3, 4, 5 mil. Some are worth, up to 800K. So it's very hard to do this video on property when it comes to, I guess, comparing it. But if we look at, 28% on a $1 million asset, that's $280,000 of it's grown in 1 year. So, and if you bought it, you put down a 10% deposit, that's $100,000 on $1 million property. Then you might have to say, put the closing costs involved as well. So you probably got maybe 130 around there, 130K, maybe a little bit more, depending. And you're gonna, you've got a massive return on investment because you've leveraged your money. You're using other people's money, which I'll talk on. But like I said, there's markets that have done greater than this in all different price brackets because there's markets in markets when it comes to property, which you understand. So cons. High entry fees, closing fees. So you get into property, there's a lot of fees involved. Mortgage fees, solicitor fees, pest and building fees, stamp duty, LMI, all the rest of it that goes with it. And, it's a painful process. It's a long process. It's not something that is, it's nice and easy to go through. If you own property, you know what I'm talking about. So there's a lot of fees involved. You can't get in and out quick. This is something that's long term. So you make sure that you do the right thing. You do the right due diligence. You make the right decision when it comes to property. This is why it's so crucial. And this can be very risky too, property. This is probably very risky. And I shouldn't put a con there as in it's high risk. This is something not the stuff around with because, one, you're using other people's money. You're getting a loan from a bank. Okay, so you got to take in consideration. Two, there's a lot of fees involved. So you can lose a lot of money on the table there as well. And this is something to take in consideration. So you don't want to be mucking around when it comes to property as well. So they're all dangerous and they're all different, I guess, in their own experience or their own, I guess, category. So take in consideration, bad tenants can destroy the property. You get a bad tenant, they go in there and maybe they're going to start smashing holes, or maybe they left it dirty, ripped up the carpet. Maybe they had pets in there and, it smells or smoking in there, whatever they're doing. So you've got really no control, but you can have control of the property manager that you use to make sure you screen the tenant and you get the right person that fits that property too. So, but you can never know, even the property manager can do the best job. And sometimes the tenant just, will just go out and destroy the property. You just can't help it. Ongoing costs, so you got your rates, you got your water bills, you got your property management fees, etc. Plus you got maintenance costs. So there's always going to be fees involved. Now, not a bad thing because you can write these things off tax as well. But of course, you got to pay these fees. It's nothing like, when it comes to stocks or cryptocurrency, the hot water service is not going to pop on a cryptocurrency because the paper asset, same with stocks. But when it comes to property, these are things that you have to, consider. So it's, it's a downfall. Long transaction, like I said, it's not flexible, can't get in and out quick. So you got to make sure that you do this decision, make this decision the correct decision. Okay. And property is a long-term game. It's not a short-term game. Don't think you can make big profits in a short amount of time. It's a long-term game. This is why, people think they get burnt and they try to, flip property and they try to get in and out of property pretty quick. This is not America where, there's no stamp duty involved and less fees compared to Australia. It's very hard to flip property. It's doable. Of course, I know people that do it, but, it's not something that can be suitable. So take that in consideration. Now, let's look at pros. I guess it's not driven by the world economy. Now, people might question this. Go, what do you mean? Something happens to the economy, the property market's going to drop. No. Look at COVID. COVID hit. Property market dropped in some countries, not in Australia. the GFC property market dropped in America, of course. In Australia, there was property markets that did drop here in Australia when the GFC hit back in 2008, the global financial crisis. But there was actually markets that actually done quite well and performed very strong, double-digit growth. Some of those markets actually grew 150% in 5 years during that period and during out of that period. So there's markets within markets, and I say this all the time because people think, oh, if Melbourne's going down, the whole country's going down. No, it doesn't work like that. When there's other markets going down, there's other markets going up. So take that in consideration. It's what's driving that economy. Now, as something happens to the economy, there might be other markets that are really performing quite well because of other industries performing. Even though there might be a crisis, there might be other industries performing very well that didn't get affected by this global problem. Plus, there might be as well things influencing the market with creation of jobs and infrastructure projects and other things, why people are moving there for those reasons. So take that in consideration and what we're seeing right now as well. You can leverage. So you can, if your property goes out in value, you can go to the bank and say, listen, I want to release this equity. And if that equity is $200,000, you take out that equity. It's like a credit card and you can do whatever you want with it. You can go out, buy more property with it. You can buy a car with it. You can do whatever you want with it. So the banks value property. They love property. They love lending money for property. You get access to credits as well. So if you go and you've got savings and you say, listen, I want to get a loan, they're going to give you a loan of, say, for $400,000 and you're going to use that to go buy a house. If you go there, if your personal savings, and you go to the bank, say, listen, I want a loan of $400,000, I'm going to put it on crypto or property, stock exchange. What are they going to do? They're going to laugh at you. So just take that in consideration. Now, let's look at forced appreciation. Amazing forced appreciation. I love this. I love the forced appreciation. You know why? Because you can manufacture your growth on your property. Do renovation, to paint the walls, do the carpets, put the aircon in, do development, put a granny flat on it. These things here add value to the property instantaneously. And these are things that, you've got multiple options to create more wealth with your assets. This is something you have control of, which is amazing. You can't do that you can't start building walls on your stock that you purchased. If it's iron ore, it's a paper axe, you can't do nothing like that. Your cryptocurrency, you can't do anything like that. So you can manufacture this. Now, let's look at, you get insurance. You can get insurance for your property, which is, if something happens, it burns down and the tenant destroys the property, guess what? You got insurance. Beautiful thing. Okay, so you can get mortgage insurance as well. Something happens to the property market, you got mortgage insurance, it's going to cover you. These are things that, you're backing yourself. So it's very low risk to some extent. Very high risk, if you make the wrong decision. Okay, tax benefits. One of the big things when it comes to property tax benefits, you can write everything off on tax. All those expenses, your property management fees, your rates, your interest repayments, etc. You can write them off. Plus, you can get depreciation. Helps lower your taxable income, which is amazing. Helps lower that taxable income, which is, something that, stocks and cryptocurrency doesn't offer. So let's say you got a property, you get a depreciation report, go to a quantity surveyor, they say, you can write off $10,000 off your taxable income. What does that mean? Let's say you're making $90,000 a year, you got to pay $20,000 in tax. You got a $10,000 depreciation deduction because you've done depreciation on your investment property. Now you only have to pay tax on $10,000 because that other $10,000 of the depreciation wipes it off. So instead of paying 20 now, you're paying 10. You get a kickback from the government. Amazing. Now, as well, it's a stable investment. Very stable investment. It's brick and mortars. You can see it, touch it, feel it. People need to live in these properties. They need a home. They need a roof over their head. They need to bring up their families under a roof. So this is something that this will be here around for life, and you can touch it and feel it. It's not a paper contract. Less volatile. Doesn't go up and down in seconds. Okay, it's not cryptocurrency, but I guess it's not going to make the high rewards like your cryptocurrency. But when you start leveraging money, that is something that you're making your 10x in your money because you're putting a 10% deposit, you're getting a 90% loan. Plus, you're getting income for the property. So if you do the right things, the right due diligence, you get positive cash flow. that positive cash flow is putting money in your pocket as well. So as a property is still growing in value, you've got equity growing. So what I mean by that, let's say you buy the property at $100,000, you bought the property. It's growing in value, capital growth. Now the property is worth, say, $110,000 after 1 year. You made $10,000 of equity. Beautiful. Let's say as well, but that property is putting $5,000 a year in your pocket because of the cash flow, and the cash flow is the rent. So after all expenses, you're left with $5,000 in your pocket, which is positive surplus cash flow, which is a bonus. So there's a lot of benefits when it comes to property. You want to minimize your tax, property is a great way to do it. You want to build wealth, by leveraging and compounding and using other people's money. You can use property is the way to go. It's stable. It's not volatile. But as well, all these assets have very, very high risk. So make sure you get the right advice. Make sure you do your research. Make sure you do the diligence. Make sure you speak to a professional, because if you play with fire, you will get burnt. Okay, so hopefully you got something from this. It's a long video, but I wanted to do this so you could get an understanding about the pros and cons. This is not general advice. This is not financial advice whatsoever. This is just my opinion, a bit of knowledge, a bit of understanding about these different assets. Thank you for watching this video.